Alexander, why don't you give everybody an intro and then I'll kind of give them a brief summary about what we're going to talk about today.
Absolutely. So I guess the easiest intro is I'm the founder of a company called Amber. We were one of the world's first Bitcoin only accumulation products. And I guess that the biggest differentiator between us and like a Coinbase or something like that in the market is we chose to build narrow and deep and build richness into the product as opposed to just listing a million different coins. And I'd say our raison d'etre is very different. What we set out to do is help users or help our customers build enduring wealth and denominate that wealth in Bitcoin, as opposed to a lot of the what I like to call shitcoin casinos. Basically, their raison d'etre is how to encourage people to trade and gamble between coins, and I just don't think that that's a good long-term viable strategy. In particular, with the emergence of what Bitcoin is, which is sound money. What you want to do is you want to accumulate and acquire as much sound money as possible. And then the doors that opens up are really interesting. And I think we're on the cusp of Bitcoin's next era, which is something we'll get into in the discussion today.
Awesome. So what we're going to talk about today is what happens when you take the fastest growing asset of all time, blend it with the most disruptive consumer credit model, and deploy it to markets which are yet to develop credit and financial markets, but whose populations are predominantly millennial and mobile native. You get what might be the most significant financial transformation in the coming decade. So let me just jump right into it. What are the three big finance and monetary trends that you're seeing around the world today? And just tell me why they're significant.
Yeah, for sure. So, I mean, the first big one is obviously Bitcoin. People think Bitcoin is like a payments network or something like that, and it's so much more. Like that barely scratches the surface of what Bitcoin represents. Like the problem that Bitcoin solves is fixing the money, and if the money is broken, like money is the tool that human beings use in order to make value judgments in an economy, and if the tool is broken, if the money no longer represents actual value or time or energy, which are the inputs that go into producing something of value, then what you get is a whole swathe of distortions. You get stupidity where innovation is like the next stupid app that someone's created, brain farted out of their butt, while real problems are not being solved. So Bitcoin goes in and it solves that problem first and foremost. And it'd be a much longer discussion to really go into the essence or the elements around that. But effectively, there is a really powerful need in the world today to be able to have money that is thermodynamically sound, that is incorruptible, that is uninflatable, that is unconfiscatable, and that is unable to be controlled and manipulated by the whims of bureaucrats. So that's sort of Bitcoin is the first trend, and it's going to continue growing. What we've seen to date has been really just the beginning of Bitcoin. We're $1.5 trillion market cap. Like this is just the beginning. Over the coming decade, we'll probably see it hit 10 to 50 trillion, and beyond that into the hundreds of trillions. So that's one. The second piece we've got is emerging markets, and what I'll say about that really quickly is that you've got, emerging markets economies as a whole are obviously faster growing than the primary markets, than the developed markets. But more importantly, their fintech piece is growing at such an extraordinary pace because they're leapfrogging all of the legacy financial infrastructure that the West or that developed nations are still sort of bound by. I've been in tech now for a while and, worked across multiple different fintechs, and we were trying to do open banking before I was involved in Amber in Australia. And it was just a nightmare. And I'm talking about Australia, where banking is like extraordinarily good in comparison to what you might find in other developed markets. But it was a nightmare because everything is still bound by red tape and regulation and this and that. So emerging market fintech is really growing, even though they still have no proper credit or finance in those industries. So that's something that's really starting to burgeon up now. And we'll see how this overlaps with Bitcoin very shortly. And then lastly is this idea of buy now, pay later. And depending on the week, you'll find good news or bad news about buy now, pay later. I think, last week people were freaking out about, the business models aren't working. The week before, they're like, this is the greatest thing since sliced bread.
Right.
So, I think what's important to understand about buy now, pay later, like if you just remove all of the noise, is this idea that you can navigate the traditional credit markets by developing a way to pay things off in installments, which is really what credit cards were traditionally designed for, right? Is to kind of like extend your cash flow.
Right.
But to do it in a way that is monetized via the merchant and bypasses a whole lot of the regulatory hoops and hurdles and minutiae and stuff that is, bogging down legacy credit by not charging the customer interest. And in doing that, you start to solve a whole lot of problems and and inefficiencies that are inherent in the merchant market and in the credit market. So these three things coming together, I mean, you have Bitcoin coming in as property in emerging markets that have no credit and finance available. So that's kind of, Bitcoin will open up credit markets then, and we'll talk about that in a second. And then if you kind of take the buy now, pay later approach to get a credit type product into these emerging markets with Bitcoin at its with Bitcoin behind it, I mean, you change the game fundamentally. So that's a bit of an overview.
Okay. So I hear it all the time on the forums that I'm following. A lot of people say Bitcoin is just a store of value. It doesn't have utility. What do you say to that? And why are you just Bitcoin?
Yeah, well, I mean, what I think people fail to understand is that money is neither just a store of value or just a medium of exchange or just a account. Money is all of those things. But what happens is, as an organic money emerges, different characteristics are more important at a particular point in time, and total liquidity of the money, because money is the most liquid good by definition in the marketplace. Total liquidity needs to be quite large for it to mature into the other elements of it. So today, Bitcoin is fundamentally a savings instrument. That is its primary utility. If you are saving in Bitcoin for the last 10 years, you have not just like outperformed the US dollar, you've outperformed any asset in the history of humankind, right? And so as a store of value, it has outperformed everything. And that is primarily because, as Michael Saylor said with Tucker Carlson recently, is like every single other asset or money or anything that we've had in the past as human beings, as demand increases, supply catches up. This is the first time we've had something inelastic, and that's an incredible feat. And as a result, it is really excelling at the store of value function. I mean, medium exchange is built into Bitcoin, though. Like I can send you Bitcoin right now, and nobody on the planet can stop me. So as a result, it's the perfect medium exchange. And unit of account is something that emerges once the liquidity of the type of money is broad enough. So what you've got with Bitcoin in particular is that it's hard to use as a unit of an account because it's still emerging. Like it's perfectly normal. When it's a $10 trillion, $50 trillion, $100 trillion sort of monetary network, at that point, then you can start to measure all other goods and services. And at that point, it'll be used as a medium exchange. And at that point, it still remains a nice, stable store of value. So that kind of, Bitcoin does all of that, but its properties are emergent. And that's really important to understand.
So you say that, so first off, you are the most knowledgeable on Bitcoin of all the people I've ever met. I try to stay up on the technology, and you definitely what I consider are an expert on it. So I really appreciate our conversations. So oftentimes there's the criticisms that these other chains, Ethereum and all of these altcoins, have all of these different features. But from your perspective, can you kind of tell me more about what you're seeing as Bitcoin's evolution and how that'll affect the world?
Yeah, so all of the other stuff is cart before the horse noise. That's the best way to sort of put it. Is like people trying to build hammers and looking for nails when we haven't solved the underlying problems yet. The first thing we need to do is we need to have a sound money on an uncensorable network. We do that, then you basically have what one could envision as a digital internet native central bank that is in code that nobody can change and can't be adapted or manipulated at the whims of a bureaucracy, right? So then we're all on the same playing field. Then off that, because it's digitally native, we can start to build really interesting things. So when I look at Bitcoin's evolution, I've got this slide here. I break it down into 4 parts really. So it started as an uncensorable payments network. That was
Okay.
and the first killer app was Silk Road. Like Bitcoin had to prove that you could transact between people for whatever you wanted, and nobody could stop it.
Right.
And that's sort of where it kicked off, and that took the network value to about 10 billion, and the Bitcoin price from 0 to 3 digits.
Okay.
The second era is where we are now, and that is
Okay.
Bitcoin as a digital collectible. And what's the killer app for that? Exchanges. So people have been exchanging, trading, and all this sort of stuff, right? And that's taken Bitcoin's network value from the low billions into now we're in the trillions, and it'll probably take it through to the 10 trillion mark as the primary use case, or as the primary thing that people use Bitcoin for, as a speculative digital collectible, in and around all of the other speculative, arguably digital collectibles. And,
Okay.
My guess is that that'll take Bitcoin probably to the 7 digits, six, obviously in the near term, and then 7 digits sort of to the extremity. But this next era, and this is what I'm interested in, is, well, what we're doing with Amber is we want to front run this idea, is it starts to become pristine collateral. So the reason the West prospered and succeeded, or one of the primary reasons, I would actually say it's probably the primary reason, over the last couple hundred years, is because of strong private property rights.
Mm-hmm.
And those private property rights were enforced by the state. Now, arguably, a lot of those private property rights have been, diminished and eroded by the state. But that's another argument. But what you've got with Bitcoin, and sorry, let me just finish this thought about the West. So with those
Okay.
strong property rights, the key property that we sort of used was real estate, because that's the most easily visible, the most easily securable, etc. So we used real estate as the core property against which we borrowed dollars
Mm-hmm.
to either enhance our lifestyle or to compound our wealth. And in doing so, the West was really able to accelerate.
Mm-hmm.
You have no property rights in the developed nations, or the developing nations, or very limited property rights, or very poor
Mm-hmm.
property rights. And as a result, they're not able to prosper. So what Bitcoin represents is something really interesting, is it represents perfect property, so uninflatable, unmanipulatable, backed not by the promise of a state or
Mm-hmm.
an institution or an organization, but backed by math. So good luck trying to change the laws of mathematics. It just doesn't
Mm-hmm.
work. So you've got perfect property backed by perfect property guarantees, available to anyone, anywhere, at any time, 24/7, in fractions of a dollar, right? So what that starts to do is, if you really start to think about what this represents, is anybody anywhere in the world could hold some Bitcoin. They could be someone who literally is a homeless person who lives under a bridge, through to a billionaire like Michael Saylor, through to someone in Nigeria or whatever.
Mm-hmm.
And if they need to participate in local commerce, instead of selling their underlying asset, the thing
Right.
that's appreciating, the Bitcoin, you don't go and sell your house when you want to buy stuff, you borrow dollars against it if you need to. You do the same thing with your Bitcoin. You secure it, you lock it, and then you borrow dollars against it in order to pay for and fund things that you need. Now, that could come in the form of funding investments, that could come
Mm-hmm.
in the form of checking out with a merchant, that could come in the form of participating in commerce in some way, shape, or form. But that sort of evolution of the Bitcoin as pristine collateral is what I think is going to take it to an 8 or 9 digit asset, and through well through the $100 trillion mark. And then at that point, then sort of, as I've noted here, is at that point, the network value and the price becomes irrelevant, because Bitcoin becomes the money that everyone uses once the liquidity and the saturation is large enough. Now, that's a long process.
Mm-hmm.
The era 1 was a couple of years. Era 2 has been about 10 years now, and it'll probably continue going on for a little while. And then this next era might be 10, 20 years. I don't know how long it is, but that's where the next multi-billion-dollar companies exist. And that's exactly what we're trying to do.
Okay. So I wanted to hold off on a question that was from Alexander. And he was saying, how does buy now, pay later work if there isn't a credit framework, as you mentioned? I feel like you were just addressing that. So can you fill in any other pieces that maybe will help to answer his question?
Yeah, absolutely. So the way we're going to do it is, you don't need a credit framework. In the traditional realm, I want to go and I need to know who you are, where you are, what job you have, your credit rating, blah, 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 address, all this sort of stuff. On a Bitcoin standard, particularly with what we're going to do with Amber, all we're going to do is give you a place to deposit some Bitcoin. and that is literally your credit worthiness right there. So if you're someone like, for example, who's been, again, Nigeria is a great example of this. Is like people are working for Bitcoin and they're getting paid for like their work internationally as developers or designers or whatever they're doing, and they're earning Bitcoin. So they're building their stack. Now they can go and spend that Bitcoin, or if they deposit it with Amber, we can credit their Amber app with Naira as an example. We're not obviously doing this in Nigeria yet, but this is just an example. We can credit their account and they can go and purchase locally with Naira if they want. And then as they earn money, they can pay that back. And what that does is it enables a credit relationship between us and the user using Bitcoin as their credit worthiness, just by them depositing it and locking it up. So that's the essence. So we're going to be piloting a product in the US in April of 2022, which will allow people to buy basically conference tickets for Bitcoin 2022, which will be the largest conference, or largest Bitcoin conference in the world. And instead of them spending their Bitcoin, they'll be able to deposit it. We execute the purchase for them. They get the ticket, and then they can cash flow out their purchase over 4 installments, 8 installments, or 12 installments.
Wow.
Yeah, no credit checks, none of that stuff.
All right, so I got a couple of questions I want to ask, but let's talk about. We only have about 10 minutes left, so let's talk about the risks. Like, how's Amber capitalizing on this trend, and what are the risks? Like,
so I guess the risks is when you've got an emergent money or an emergent asset of any kind, particularly like Bitcoin, you're going to have what I don't want to call it volatility. I want to call it relative volatility, because Bitcoin, it's inherently itself, it's not volatile. Like Bitcoin, every 10 minutes there's a new block. There's, how many Satoshis there are in a Bitcoin, how many Bitcoin there are on the network. So inherently Bitcoin in its own bubble is not volatile. It's only volatile in relation to the things you're measuring it against. I saw a really good tweet the other day of the price of the iPhone 4 down through to the price of the iPhone 13, but not priced in dollars, priced in Bitcoin. So iPhone 4 started off as, I think, 2,468 Bitcoin, and now the iPhone 13 is 0.002 Bitcoin. So that's kind of, Bitcoin's purchasing power continues to increase. Now, along the way, like nothing moves in a straight line. You show me one asset in the world that moved in a straight line, and I'll become your slave. Like, it doesn't exist. So during that process, what we need to be careful of as a company is when we lock up the Bitcoin for these people, we need to ensure that the purchasing power of the Bitcoin doesn't fall to a level that the money that we've given them incentivizes them to run off. So we're going to employ a couple of strategies like over collateralization for new users. We're going to employ the buying, basically protecting the positions with put options and things like that we can build into the business model so that we can manage the fluctuations and volatility. But other than that, I mean, this fundamentally means that we can go and create credit relationships with anybody, anywhere, 24/7, so long as they have some Bitcoin they can deposit on Amber, and we can give them the money. So that's really where this is going. And I think the risks are quite manageable. I mean, maybe the only other risk that I can think of actually is regulatory risk, where, regulators who don't understand what this is, and they're like, oh, they come in like a bull in a china shop and trying to like protect people. And they kind of put roadblocks in the way. And my solution to that is basically two-pronged. Is one, you work with the regulators and educate them, but simultaneously is you build a global company so that you can do regulatory arbitrage and jurisdictional arbitrage. So you can go to places where you can deliver this with minimal headache, and they're the countries and the places and the jurisdictions and the territories that will prosper from a product like this.
Okay, I love that. So how is Amber capitalizing on this, like, overall?
Yeah, so we're going to be the first Bitcoin-backed buy now, pay later product in the world. I know there's a whole lot of buy now, pay later products out there that are coming out and all of this and that. And what we wanted to do was something fundamentally different, where we don't just randomly issue people credit, which is what all the buy now, pay later products are doing. What they're doing is they're kind of chasing verticals and niches and everything, and they're just randomly just giving credit to people. Right. And then they're coming up with, what happened to Klarna recently and ZipPay and everything. They're like, oh crap, we lost a bunch of money. Yeah. So for us, what we're doing is we're first and foremost helping people move out of dollars and into Bitcoin. So that way they're building that stack and they're building their long-term wealth, and their purchasing power is continually appreciating. My sister's actually a really good example. She's a young kid. She's never saved in her life. She doesn't know anything about investing. And over the years, she's been buying, $30 a Bitcoin every week because her brother told her to. And the couple grand that she saved is worth, I think, I don't know, $20,000, $30,000, $40,000 now. So she's got all this extra purchasing power that she can now borrow some dollars against, and she can go and buy that new car that she needed, or she can go buy something for the house, that she's moving into next week. So that's how we're, to answer that, then, like, we're merging our two products, so our accumulation products, our wealth management product, with buy now, pay later, that I would call almost ethical buy now, pay later. We're not just issuing credit to people who can't pay it. Like, you've got the collateral there. You've got the capacity to repay it, and we're incentivizing for you to save in Bitcoin first before you go out and buy things you can't afford. So that's kind of what we're doing. So that's our niche. That's our angle. And as I said in the beginning, we're at the confluence of multiple trends. So we're gonna benefit from all of these things moving forward.
Okay, so with 5 minutes left, why don't you tell people, give them a little bit of context about Amber's app right now, the current clients you already have, and then what you guys are offering currently.
Sure. So as I mentioned, we've, like, our core product is a Bitcoin accumulation product. So this is a little screenshot here of what it looks like. But basically, acquire and accumulate are the core functions, and buy now, pay later is what we're building out now. So we'll have the MVP ready by January. We just raised the $3 million round recently from a couple very strategic players, and as we sort of build that in, we've actually got this model that we want to build in here called the Flywheel effect. I've got it somewhere. So where we want to combine the purchasing element of the product with the buy now, pay later element of the product with a rewards element. So that way people choose to check out with Amber's buy now, pay later before they choose Visa, MasterCard, or PayPal, because every time they check out with Amber, they're going to get a percentage back, but in sats. And for those who don't know, sats are the micro denomination of Bitcoin. So the same way as $1 has 100 cents, one Bitcoin has 100 million sats. So you get your rewards every time you check out with Amber buy now, pay later. So as a consumer, there's no interest. You cash flow your thing out. You unlock latent purchasing power. You don't have to sell the underlying asset. There's no tax disadvantages. There's no tax event there. And you get somebody sats back every time you do a purchase. Like, it's a no-brainer for you to purchase there. And for merchants, they get to tap into an entire market, like all of this locked up capital that is not going to be sold to go and buy their products or services otherwise. So like this, they get to access that. We bring them customers, we bring them higher ticket sales, increased checkout conversion, all these sorts of benefits for the merchant. And for them, all they're going to do is pay a marginal difference of about 1% over what they would have paid Visa, MasterCard, Stripe, or someone like that. And it's just such a match of the two. And having built the product initially around Bitcoin accumulation, having tens of millions of dollars on our balance sheet of customer funds, like, it gives us an ability to jump straight into that and offer this product straight away.
With the Bitcoin that you are holding, are there any strategies you guys are doing to earn yourselves?
Not at this stage, because there's a lot of risk that underlies that stuff. So we haven't found an elegant way to do it that genuinely removes the risk. I think there's a lot of people out there doing stuff, but what we haven't seen is a real move in the price of Bitcoin. So I know a couple of them who almost went bust during the last Bitcoin pumps. So we're not comfortable yet moving into that space. I think down the track there'll be an opportunity to do stuff, and I think particularly with the emergence of the Lightning Network, the ability to pledge some of your Bitcoin to help channel management. At the moment, the average APR with large scale Lightning nodes on Bitcoin is between 4 to 6%. So it's pretty damn good. And that is a zero risk way of pledging your Bitcoin. So there's some really interesting stuff that is emerging there, which again, completely reinvents the notion of earning yield. It's not like you're actually putting the Bitcoin to work to help manage and balance channels on the second layer network that is Lightning and Bitcoin. So there's some stuff there. And again, being a Bitcoin native company allows us to move into those directions.
Now, you mentioned You said no interest payments for clients. I notice a lot of these afterpays, they try to get people in the door or affirm with 4 easy payments with no interest, and then after that, they're hitting you 15% interest.
Yeah,
Um,
so yeah, that's something that we're gonna not have to do. So it's not that, I mean, Affirm and Afterpay are a little bit different. So I'll just add some color here. Is Afterpay
okay,
never charges interest. What Afterpay hits you with is late fees, and the late fees are quite hefty. So we've got no late fees. What we've just got is a warning that the Bitcoin that you've locked up with us, a portion of that will get sold down if you don't make the payment on time. But there
okay,
won't be any late fees associated with it. So you as a consumer, like for example, let's say you made a couple of repayments and then, I don't know, you lost your job or something. We just make it easy. We'll just cover the balance with a chunk of the Bitcoin, and then you get the rest of your Bitcoin back. So your difference in cost hasn't been changed. Affirm is a little bit different. They've got credit licenses in America, and they actually are a credit product. So they
okay.
will charge interest depending on the kind of product. And yeah, they kind of suck people in early and they slap them with a big interest rate on the back end.
Mhm.
And they're kind of getting a lot of heat now because they're kind of, what that's called is predatory lending. In
Right.
our case, the predatory lending piece doesn't exist because you've got Bitcoin already that you've locked up. So you've actually got the capital there, you've got the wealth there in the first place.
Okay. We have one question and 1 minute. What fiat currencies and geographies are you currently in?
So we're in Australia and the US at the moment. So we're gonna prove the product in the developed markets because we can navigate the markets, and we've already got our core product there. So it just makes sense. But off the back of that, and off the back, we're going to raise a Series A in March next year. Off the back of that, we're going straight to emerging markets: Brazil, Mexico, India, Nigeria. Like they're the markets where I think the largest growth is going to be, and that's where that'll make the difference between us being $1 billion company and $100 billion company. Is like that's where we need to be. So that's where post Series A, all of our intent and efforts going to go that way.
All right. Can you give everybody your contact and
Absolutely. So the best way for people to reach me, I mean, that's the website there. You won't see anything about buy now, pay later because it's still in development, and that'll be launched very shortly.
okay.
But my best contact, I mean, my LinkedIn is good. So just Alex Svetsky, so ALEKS Svetsky on LinkedIn.
Okay.
Or alex at getamber.io
Okay.
via email. But I'm sure, Jeremy, you'll have the details, so you'll be able
Absolutely.
to share them with everyone. It's the best way to get in touch with me.
Absolutely. If anybody wants to get in touch with Alex, I will definitely connect the two of you. This has been great as always, and look to hear more about Alex and Amber in the coming year as their new member with Flyer. So we're happy you're on, and it would be great to keep talking.
Thank you, Jeremy. Appreciate it. Thank you,
All
everyone, for
right.
listening. Really excited to chat with anyone who wants to.
All righty. Thank you so much.